Hello and welcome to This Week in Bitcoin, brought to you by Relay Private. And what a week it has been. I think we can officially say we're back in the bull market. Bitcoin has surpassed the $50,000 mark, and I'm saying the $50,000 mark deliberately because by the time of recording this, editing and uploading it, it probably has continued to go up in price even more. And with it, we also surpassed the $1 trillion market cap mark again since December 2021, which inevitably was the end of the last bull market. And it's safe to say that we're now back in a bull market, but what is a bit different compared to the last ones is the actual way I think it developed, because this time retail interest is almost non-existent. If you actually go on Google Trends and you look up search results for Bitcoin, Bitcoin price, how to buy Bitcoin, it's very low still at the end of this day compared to like previous bull markets where it went crazy parabolic. And if you actually take a closer look at who is actually influencing this bull market now, you'll realize it is the big boys. Wall Street giants are actually influencing how people persuade Bitcoin, how Bitcoin is being presented in the media, what people think about it, the access to it now with these ETFs, although it's not real Bitcoin, we all know this. But this is a big push in actually getting the Bitcoin voice out there into the real realm. And with it, we potentially have for the first time now a different scenario in a bull market, because if the price continues to appreciate the way it has now and retail finally catches up, for the first time ever, you would have that situation where it's actually institutions that drive the price and not the retail clients. And it makes you wonder like how big of an impact then retail will have. Anyway, for those of you who have been stacking for a long time now and continued through the bear market, you've been rewarded. I guess we're back in the bull and things will about to get crazy. And then secondly, we have some positive news also for the whole Bitcoin environmental world, and that is that the Argentinian business Tecpetro has announced that they've been mining Bitcoin on one of their oil and gas farms way back since September 2023, and that they actually looked at the technology of ASIC miners and specifically to mitigate flaring gas and to use this wasted energy in that point to then get it back into the system, mine Bitcoin with it, and see if there's any potential to the solution. We all know that there is, and this is the reason why the business also announced that they're looking to expand further into either other territories or they continue working with other oil and gas businesses. And they really want to make that approach that they show how Bitcoin mining is actually a net positive for the environment and that you can reduce emissions, that you can actually use that flared gas for something good now and not just heating up the atmosphere and basically destroying the planet along the way. But that Bitcoin can actually be used to mitigate that risk, for them also to monetize energy, and at the end of the day to have a different income stream probably, because these businesses, they operate on very thin margins. And if you have something as unique as Bitcoin that is on the one hand solving an energy problem for them and on the other end monetizing the energy they can actually use, you basically get a no-brainer that this is the right way to go. For us, it's positive as well. Another example of how to reduce emissions with Bitcoin mining, that it can actually be a green industry, and yet just another approval of why Bitcoin mining is as good as it is. And then last but definitely not least, we also have some FUD this week, this time coming around from Gary Gensler in a CNBC interview with Squawkbox, where he just blamed himself essentially. He went on to the same arguments being used for money laundering, you can basically pay drugs and human trafficking with this and all of these things. He also made a funny comment that Bitcoin is not decentral because it's being traded on centralized exchanges. All right, I guess the way something's being traded is also influential in how decentralized it is or not. He's clearly not understanding the difference between the asset and the actual marketplace. And centralized marketplaces are always more efficient than decentralized ones, right? So I don't get why he's not understanding this. But we are not the only ones who don't realize this. Joe Kernan, one of the hosts on CNBC Squawkbox, he's the older guy. He's quite a Bitcoiner, actually. He stepped into that role in the last couple of months. He also said that this is actually not true, that the dollar compared to Bitcoin is used way more for money laundering and all of these things. And at the end of the day, you just saw that difference there between someone who understood Bitcoin, probably took his time, and someone like Gary Gensler who's just not getting it. But at the end of the day, that's positive. People will see what the issues are with the old system, these regulators, how not up to date they actually are, and also how full of themselves they are. Who are you to judge what's good and not if you have not spent a lot of time with it, if you're not researching pushed it enough. And on the other end, if you have not that much trust in such a system and you have the inevitable option with Bitcoin, again, basically a no-brainer to which system you'll move. So at the end of the day, everything's good for Bitcoin. The interview's funny. If you want to go and watch it, I'll link it below. But without wasting any further of your time, we're at the end of this week's episode of This Week in Bitcoin. If you got any questions, suggestions, feedback, let us know in the comments below. And I look forward to seeing you again soon next week.